G'day everyone, welcome back to Pete's Investing. Today is June 24, 2023. This is the nat gas price update. Well, we've finally broken our resistance up here since our last video. We've got a bullish momentum on the weekly, bullish on the daily, and also bullish on the hourly chart. And I'll talk about these little divergences that have also worked out quite well. First off, on the weekly, we look at the triple moving average of the price chart, the moving averages of the CCI 150, and our new indicator down here, which gives us a bit more clarity and consistency. It's showing a bullish momentum. It's turning up on the weekly chart. So bullish momentum on the weekly. On the daily, likewise bullish on all three indicators. But very importantly, we did draw these support and resistance lines, this dark blue and dark red, dark red line on it at 27.86, and that was breached overnight, and it's making it potentially further upside. That's a result of this. We had a bullish divergence on the CCI versus this bearish divergence, which we've been tracking back here since early March. And now we're looking at a target area up here between the 23% Fibonacci range, the 23% and the 38%. We choose the closest target as a potential target area. Okay, this may well go higher, or it may not even hit this target. So there's a lot of unknowns. We look at probabilities of things happening. We did have a downside, but it looks like that downside is not happening anytime soon. It may well get into this target area that we spoke about. So that's on the daily, an upward momentum. On the hourly, we did also have these other divergences. Before I talk about what we've done overnight, we did have these a bearish divergence here versus a bullish divergence on the price chart. It fell below our target. Once we entered, it fell below this channel. If you had drawn a channel there and hit our target area. So that was a successful divergence trade. A bullish divergence versus a bearish divergence. It broke above, it went sideways for a while. It broke above there, went sideways, but then it finally broke into our target area there. So that was also executed nicely. Then more recently, we had a bearish divergence at this point versus a bullish on the price chart. Eventually fell below our little channel there. That would have been your entry point, and it hit our target there before bouncing further to the upside and eventually penetrating through the resistance area. So that's where we are at the moment. Now, there's no telling where it's going to go or where it's going to stop. As I said, it could very well turn down from there. But at the moment, we've got a minor resistance forming, and I'm going to move this minor resistance, the dotted line, to that point there. So meaning we may see a retrace back to the downside before possibly making higher movements to the upside. Now, in terms of the three timelines, that I prefer to trade when the weekly, the daily, and the hourly are in alignment, and that's where I've got these two backtests, the bullish backtest and the bearish backtest. So when all three timelines are aligned, in this case long, you would predominantly take long trades, and you can those indicated by those little spikes, and those little points where the price averaged down, or we added more to our contracts, they were called drawdowns, and as you can see there, the drawdown of the profitability on both of those points. And to avoid those, as I said, you always take the trades in alignment with the weekly and the daily. In other words, you don't take long trades when the price is going down. Okay, so again, to understand this and other trading strategies, subscribe to my Patreon page, where we also do some weekly scans of stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.